So if we go back 12 months, the big data marketplace was really, a few companies were going into production, but not many. Most companies were kicking the tires, maybe a small cluster of say 10, 20, 30 nodes, but not the hundreds and hundreds of nodes that you'd expect in a full-blown deployment. Now what we're seeing is an increasing number of those customers that were sort of in a lab and on a trial basis now taking applications into full-blown production. The other facet of the market that has changed is CIOs really need an elastic infrastructure to run compute, so they don't know how many servers they're going to need in order to do that. And of course the solution to that problem is in the cloud, which gives you a completely elastic infrastructure. So this requirement to have data in a sort of hybrid mode, both on-premise and in the cloud, and that really is a fantastic use case for WANdisco, because that's an active use case, and that's precisely what WANdisco's technology enables us to do. I know we're going to talk a bit later about the IBM relationship, but the main driving force for the OEM with IBM was actually that hybrid cloud, and we're seeing this as an increased use case as the market's evolved from those sort of small lab-based projects now to full-blown production that involve both on-premise and cloud. So first of all, this is a fantastic relationship for a small company like WANdisco to have. It gives us tremendous operational leverage. I think there are 4,000 or 5,000 trained field salespeople at IBM that are now selling WANdisco's Fusion product. Well, actually, it's not WANdisco Fusion. It's actually called IBM Big Replicate. It's completely white labeled and rebranded as an IBM product, and so far so good. It's going extremely well. Products have been launched on time. We announced that recently for both on-premise big data applications, which is the IBM have their own Hadoop distribution, and also in cloud they have a product called Swift, and IBM are building bridges that go from on-premise to cloud. So when I don't know how much data I'm going to have, or I don't know how much compute power I'm going to need, then I need to be able to connect both on-premise and cloud and get the same results, which is an active use case. And that was a real driving force for IBM to come and OEM the product. And just a little bit of perspective, IBM don't go out and do hundreds and hundreds of OEM deals with all kinds of different companies. I think you'll probably find that for big data and cloud, I don't know of another OEM deal that IBM have done. I think we're the only OEM. And that's a really important fact for our shareholders to understand. This deal took a long time for us to execute. It took IBM a lot of testing to do, and now we're enabling 5,000 IBM sales reps to sell the product. Now we're going to see the results of that in the second half of the year, as I would expect revenues to start flowing. Well, there's another small company called Amazon, who are the fastest ever enterprise software company to 15 billion of revenue. They did it in sort of 10 years. Now Amazon Web Services is a phenomenal company. Just as a standalone company, I think you'd probably see its value as almost that of Oracle. You know, this is a really serious company. If you go to the AWS marketplace and you look at the front page of the AWS marketplace, they have probably 6 or 7 featured products. WANdisco is a featured product on the front page of the AWS marketplace. I think that demonstrates how strategic our technology is to Amazon. Obviously, actions speak louder than words. So the ability for customers to move transactional data in and out of cloud is very important. WANdisco is the solution to that problem. So the Amazon relationship's going well. Of course, we're looking at other relationships with other cloud vendors that we've not announced yet. But unsurprisingly, the same problem that IBM and Amazon have got, which is movement of data in and out of cloud, other vendors also have the same problem. So we're looking at an ecosystem really focused on on-premise, big data, and cloud, sort of public cloud infrastructure, and we have a number of partnerships that we're looking at there as well. So the IBM OEM relationship is interesting for us obviously from a go-to-market perspective, but it also from an operational efficiency, operational leverage perspective. It allows us to reduce our sales costs, our sales and marketing costs significantly. So if you look at our sales team as a direct selling team, you'd need hundreds of salespeople really to execute in a for the potential market size. We're now reducing that team down and focusing on an indirect model. That's allowed us actually to cut significant costs from the business without affecting growth. That's very important. Now our path to profitability is actually very simple. Our costs have come down to sort of 25 million this year, and of course if we can get our revenues, if we can get our bookings up to that amount, of course, so we're targeting very much to get to cash flow break even very soon. So obviously we've got results coming up in the first I think August the 4th, H1 results, and then beyond that we'll be looking for execution within partner channels. Certainly IBM is a very important partner channel for us, and we should expect to see revenues flowing from that. Also Amazon and others, where we should expect to see deals coming through those channels. And also our direct selling, as we see deals that go from small lab projects to expand at much larger footprints in an organization, going to hundreds if not thousands of potential server nodes.